Good morning, even though it's not going to be a good morning, but good morning. Let me see how things look. Everything look good. Okay, first up, unless anyone need specific op- opinion on any given stock, is there a need? Is there a need to even look at any stock to know what's going on? Okay, so I'm gonna use this 30 minutes or so to talk about the economy and other things than anything specific because we know yesterday was a bad day. Today is going to be a bad day. This week is going to be a bad week. Um, it is what it is. Okay. Everybody, for the most part, is losing money in the market, and this too shall pass. Okay. If you need to sell something, you will get your chance just like you had the chance last Friday. For those that are in the chat group, I casted my doubt last Friday that the big pop was legit, and I advised people to get out, to trim, to raise your stops, do everything to protect what you had on the big pop last Friday. I hope some people listen. That's all I can say because I'm just a dude. I'm nobody. All right. On a grand scheme of thing, I am nobody because I am just some guy on YouTube. Um, as in every bear market, there will be violent upday. Take those opportunities, as I mentioned to my brother yesterday. Take those opportunities as a chance to sell some, even if it is a loss. He appreciated my hand slapping yesterday. Oh wow, he appreciated the hand slapping last week because he got out of tons of stuff, raised a bunch of cash. It is what it is. Okay, these are not the time to say, oh, I that position is red. I'm not gonna sell because it's down. I'm gonna hold on. You can, as long as you understand that whatever it is that you're holding on can go much lower. So if you can tolerate the pain and ignore the pain, then by all means, don't sell. If you don't want to lose another 5 or 10%, then that's fine. But if you rather sell here, buy back 5 or 10% lower, then do that. Okay, it's trading is not for everybody. Investing is not for everybody. But if you're in the game right now, I have been saying, for those that have been following me for the past 4 months, I have been saying for a long time now, at least 2 months, that we are in one of the toughest trading environment that you can face. If you can weather this storm, learn some tough lessons, and import that into the next 20 years plus of your investing career, you will do very well. It does not get any harder than this, okay? Trust me, I've been in this game for 30 years plus, and I can tell you it does not get any harder than this because emotionally it's taxing on everyone. Okay, it's not an easy thing to do. Okay, yes, nothing wrong with killing your darling. Okay, I see this very often. People fall in love with the books, people fall in love with the stock, people fall in love with the company. Just understand how or why, or I think I want to spend this next 30 minutes to talk about why certain sector work and why certain sector does not work in a recession. Um, this video, I think for the next couple live chat, even this weekend, I want to make it more into an economic talk because I think not enough people uh, want to learn economics or understand economics, and often I hear complete utter nonsense from viewers like you and people I know. It's just people that it just, I get it, okay? A lot of people didn't go to school to study economics. They study economics. They understand economics through what? Through what they hear on TV. Good God. If you think you understand economics because some guy on CNBC says something, please stop. Please, please, please stop. You don't know jack shit. Okay? Unbelievable. It bothers me so much whenever I get into a discussion or a debate or argument with people about economics when they know jack shit. Unbelievable. Unbelievable for people to open their mouth and trying to argue with me about economics. What the fuck are you talking about? Holy shit. Holy shit. I would never go to a mechanics and argue how to fix a carburetor. What the fuck are people talking about? Okay? It's mind-boggling to me for some of you to want to debate with me about economy. What the fuck do you know? Jesus fucking Christ. It is fucking stupid, right? Holy shit. It's like me going to a doctor's office and trying to debate on what I have or what's wrong with me. It's just like, stay in your lane. If your lane is something else, stay in it. If you don't understand economics, how things work, why the fuck are you listening to people on TV? What do you think those people on TV has that you don't know? They understand this. In investment, in anything, there are two sides, okay? There's always two sides. People that want you to buy something, they are selling you something. It is that simple. I have an ethical code within me that detests that kind of behaviors for whatever reason. I don't know why. That's why on my channel for the past 9+ years, you have never seen me make a video telling somebody, oh, here's a comic book you should buy, because I want to sell it to you higher. I want to make more profit off you, okay? You have never seen me make one video. There will be never one fucking video of me doing that, because I detest that kind of behavior, because I see it every day on CNBC. You have people selling things. Oh, you should buy this. You should invest in this. That's what they do. That's what every people on CNBC do, okay? Buy oil. You should invest in oil. Who do you think are selling you oil stocks? Who do you think are selling you? The message is always built to create a reaction for people that say something on CNBC. Doesn't matter. That's how it is. Okay, that's how it is. It's for me to hear people say, "Oh, oil is going to 200." Who do you think are selling you oil? Who do you think is gonna benefit if you go out there and chase up oil stocks and oil futures and oil this and oil that? You think the person that are selling you on CNBC, oh, buy oil, it's going higher. You think those people are not benefiting? Okay, it's just like, stop repeating shit from talking shitbags on CNBC. Nothing irked me more when any of you repeating shit to me that I know is utter shit. Okay, it's utter fucking shit. Oh, oil is going higher. You think a recession is going to get oil higher? What fucking country are you living in? Go back and look at history. It's just like the failure of people in this country. For many of you, the failure to understand simple economy or understand how things work in the past many recessions is just mind-boggling. Okay, mind-boggling. It's just like energy has crashed every recession. If you think that we are not going into a recession, I don't know what to tell you. If you believe that oil and gas is going to go higher because you don't believe in a recession, I don't know what to tell you. Okay, it's just mind-boggling to have logic escaping so many people. People just listening to CNBC, talking heads everywhere, and they believe. I'm just like, if there's anything on this channel, whether it's comic books or stock, what you get is just the honest answer. Okay, I'm not here to sell you anything. I'm not here to try to pump anything or dump anything. It's pretty clear by now, right? Especially with comic books and how I behave. So there's no different than what I'm doing here. Let's talk economy. We talk about phase two. For those that in the chat group, I talk about phase two for quite some time now, right? We can go back and look. If not 2 months, at least a month or more than a month. The reason why consumer staple and healthcare, for those that don't know economy, the reason why those will do well in a recession is that when times are bad, when times are tough, layoff, people don't give up eating. Okay, they will still buy snacks. They might not go to a restaurant, but they will still eat. That's why things like Pepsi, Coke, Mondelez, General Mills, that's why those things tend to weather the storm. Sure, they get sell off in phase two like everything else. But in tough time, they will weather the storm. Same thing with healthcare. Why? Regardless of how bad things are, what would you and I give up? Vacation, new car. But if we are sick or dying, are we going to stop going to the doctor or hospital to get the treatment? No, right? So that's why healthcare and consumer staples are the best sectors to put your money in a bad recession or in a recession. It is that simple, okay? Use some common logic to your investment will go a long way instead of listening to talking heads. Buy energy! Woo! Unbelievable. Energy has done very well this year. A lot of it has to do with Russia, Ukraine. The people that want to sell you energy, want you to buy high oil, want to buy high oil stock, they want you to pay higher so they can make more money because they know in a recession, shit is gonna hit the fan, okay? This is why I talked to my brother over the weekend. I said, this is why the transport do very poorly in every recession, because in bad time, people drive less, business buy less, the need to transport good, much less, the need for oil, much less. It's common sense. It is not about, oh, because China is opening up, they're gonna, no, fuck China, okay, fuck China. No, it just, you think if the US hit a recession, you think that's not gonna slow down China? We are the number one consumer in the world. If we sneeze, everybody catch the cold. Get that, all right? Get that. So it's when I first get into this business, into economics, there was time where a lot of people talk about, oh, global diversification, invest in Europe, invest in South America, invest in emerging country, because you want to protect your portfolio because sometimes when the US is down, Europe is up, this and that. Well, guess what? For anyone that want to study statistics, go back and look at the correlation of the US market compared to Europe, compared to Asia, and you will see over the past 40 years, the correlation is getting closer and closer and closer to 1. Because when we sneeze, the whole world catch the cold. Okay, so the whole idea, the whole concept of global diversification is nothing but horseshit. Nothing but horseshit. I've been saying that since the 90s. For sure, in my last few years in the business, 2000 and 2001, I was just like, this whole concept of pitching, selling people to global diversify is just utter shit. Look at the data. Look at the statistic. The correlation is no longer 1. 1 is perfect correlation, right? -1 is perfect negative. And I'm like, when you have correlation of like 0.8, 0.7, what is the point? It is almost correlated to the T. It's like how TLT in the NASDAQ is. What's the point of diversification there, right? It's so in bad economy. That's why for those that pay attention to Target and Walmart conference call the last 2 days, one of the things that they see was what? Ballooning inventories of a lot of goods that are considered consumer discretionary. Ballooning inventories. You know what's going to happen? They're going to stop ordering a lot of shit. A lot of trucks are not going to be needed, okay, to drive big screen TV and washer and dryer and all that stuff. They talk about that. Walmart and Target, both of them. Okay, so all this supply chain issues and this and that, oh, you watch. Just as I said many times in the past 2 months, a cure for high wages is what? Recession. A cure for supply chain issue is also a recession. Okay, I'm tired of hearing supply chain. I'm tired of hearing the blame on that nonsense. You watch. The narrative of supply chain and high inflation will switch in about 6 weeks when we're in a recession. And it's going to be just like, oh, no, now it's going to be like, oh my God, how soon is the Fed's going to cut rate? On the screen, hopefully it'll come through clear. Look, you heard me talk multiple times in the past months. The stock market always front run the economy. You heard me say that many times, okay? So pay attention to when we have a recession in the next few months. Look at this on the screen. This is what the Fed did to try to crush the housing market in that bubble, okay? Look, 17 times. 17 times in 2004 through 2006, the Fed raised the Fed fund rate. 17 times in 2 years to crush the housing market. Okay? When did the stock market crash? It started to crash in 2008. Look at the recession. You see the gray area that we have here? That's a recession. Okay? The recession officially took place in December of 2007. Yes, in 2007. And as you can see, the Fed cut rate to zero. Zero by December of 2008. Okay? If I could superimpose this with the stock market, but for those that follow the stock market in 2008, it's already started to crash. It bottomed out February of 2009. Okay, the stock market bottomed out in 2009. But it's just to give you an idea of how no matter what the Fed tried to do to stop inflation, they will meet with a harsh recession coming. Okay, that is just not. It's unavoidable. Trying to avoid a recession, if you study economics, it's like trying to cheat death. Okay, it's a normal economic cycle because it's a human behavior. I talk about, economic is a lot about studying human behaviors, greed and fear. Okay, because we as a species cannot understand how to live within our means. For most people, there's a lot of people that just cannot understand the simple concept of not overspend, not overconsume. We're all guilty of over something, overeat, overspend. That's just human. It's one of the worst human flaw that there is. That's why economic cycle of boom and bust exists, because we cannot stop ourselves from over consuming. We're never happy. Okay, none of us can be, well, most of us, I wouldn't say none of us, but most of us tend to overconsume, overspend, over something, because that's just how we are wired. There's no, I'm sure my wife would find something to say that I'm overdoing something. I'm over YouTubing. I don't know. I'm definitely not an overspender, overconsume, and I'm overeat, but I'm sure I'm over something. Okay, so it's human to overconsume something, and that's what boom and bust is all about. We can't avoid it. And the Fed has always tried to manage a recession, and I'm just like, why? Let it happen. Because the more you're trying to monkey with normal cycle of human beings, the worse you make it. Just like overstimulus the economy. Remember, the bigger the bubble, the bigger the pop. Just know that, okay? It's just not a healthy thing. It's now. Do I think the bubble that we have now is worse than the bubble that we have in the last Great Recession? I don't know. To be honest, I don't know how to measure or how to quantify how much worse, or if it is worse. I don't know. Okay, the only thing that I can say is that I see a recession, and unlike many people on TV that are trying to sell you something, it's baffled my mind to still hear people on CNBC, even today, talk about how there's a slim chance. The chance of a recession is really small, really small. Oh my God, it is utter nonsense. Look at the mortgage rate. On the screen, you see the mortgage rate. Okay? Just look at this nonsense. You see mortgage rate crash in 2008, 2009. That's about the bottom of the market. Okay, so yeah, the Fed is always behind the curve. Okay, I've been hearing this for a long time. Oh, the Fed is behind the curve. The Fed is behind the curve. When is it that the Fed is ahead of the curve? When is it? Please, can somebody please tell me, when is the last time if the Fed foresee this housing crash in 2006 through 2010 that caused a Great Recession, do you think they would raise rate 17 times? Yeah, you see this? So when is the Fed so the narrative that you hear on TV for the past year, for sure the past 6 months, the Fed is behind. When is it that the Fed is not behind? Always. Because they look at what? This is the thing that bothers me so much with all these expert in economics. The Fed is full of PhD in economics. The Fed is looking at backward data, always. It is mind-boggling stupid to have the Fed making decision looking at backward data. Okay, it is mind-boggling. Am I saying that the Fed should do a better job forecasting, foreseeing things? They should. The Fed is always behind the curve because they use old data. They are never proactive on anything, if ever. Okay, so the narrative that you hear on CNBC for the past 6 months, oh, the Fed is behind. The Fed is always behind. Always. Have always been. If you study history of crashes, recession in this country, oh my God, it is it's laughable that these people think that they are anything beyond academia in economics. Shameful, okay? They didn't get there. Let me put it this way. People that got into the Fed or was a Fed, they didn't get there because they had any kind of merit of achievement. They didn't. But yeah, I am floored at the notion that somehow the Fed is behind, is something new. The Fed has always been behind. Okay, always. It is utter nonsense to even think otherwise. Now, back to economics talk. Okay, one of the things that I am bullish on is, of course, McDonald's, Pepsi, even Chipotle. Why? Why? Hear me out. We all know about margin being squeezed because of inflation, higher input costs. Okay, higher input costs. The ingredient across the board for McDonald's or Chipotle or Coke or General Mills or Budweiser, we all know. But here is the big positive why I think phase 3 is going to be a boom for a lot of these companies. That's my prediction. Okay, I told my brother, if I'm buying anything in the next few weeks, it's going to be more consumer staples. Better yet, I told him, just buy the XLP if you don't want to focus on specific company. Why? Why do I am extremely bullish on consumer staples? As I just mentioned, we have squeezing margin due to high input costs. But what? As the recession hits and inflation subside and input costs decline, transportation costs decline, you think McDonald's, Chipotle, Pepsi, General Mills, Bud, you think any of these companies will cut prices? When is the last time any of these companies cut prices after they raised them? Never. So what you're going to see is the margin is going to be improved very fast, very quickly in phase 3, full-blown recession. Okay, so bookmark this part of the video and give me kudos when you start to see and hear McDonald's and Pepsi and Coke and Budweiser talk about improving margin 3 months down the road. Okay, that is the kind of thing that excites Wall Street. Growth, expanding margin. That's when you see people buying into company. Okay, nobody like to see less growth, slowing growth, squeezing margin, declining growth. Those are all bad terms for Wall Street. Okay, they want to see expanding revenue, expanding growth, expanding margin. Okay, more profit. Thus, I am very bullish on consumer staples, more so in this recession than in previous recession. Remember, Every recession is different. The only thing that's similar is recession. But when it comes down to the component of why a recession happened or what's going to benefit, it's always different. Okay, I have a long dinner talk with my wife and son last night because we were talking about the stock market, and I told him we were talking about housing, real estate, and stuff like that. And I told him, I asked him, both him and my wife, I said, do you know that the real estate rate, the mortgage rate in 2008 and 2007 is higher than what it is right now? My wife was surprised. I told my son, I said, you were born in 2007, so you didn't know it, but every bubble is different. Every recession is different. The housing bubble of 2004, 2005, 2006 was created because of the easing loan requirement, liar loans, all that stuff. It's not because rate was low. Rate was 5 or 6% or even higher. So it was not induced by low rate. This time, different story. This recession, this housing bubble is all about the mortgage rate being 3%. Very different, okay? This time, profit margin being squeezed by just about every company out there is because of higher wages and higher input costs. That was not the same as the last recession. Okay, so every recession is different. The rebound is similar as far as what sector will do well or weather the storm. Okay, it's always, every recession is always the consumer staples and the healthcare, but I am more excited this time because of what I just outlined. You're going to see expanding margin in many of these consumer staples, and that would be a good thing. So I don't have a problem buying into Pepsi and McDonald's and even Chipotle if it's getting a little cheaper, yeah. But I like that. I like that a lot. So with that, I think I'm done. Unless there's anything specific, which I can't imagine why there will be anything specific. Everything is down, okay? Everything is down. Nothing is up. Let's take a look at TLT. TLT is flashing. It's flashing higher, which is not a good thing. Okay, that's the last thing that well, no, that's a good thing. It's flashing higher, so it is a good thing. TNX is flashing lower. See, look at this. I talk about TNX and TLT. I talk about TLT since the very first chat 4 months ago or 5 months ago. Very first, I talked about TNT, watch TLT, watch that in relation with the NASDAQ. I talked about that 5 months ago. But I introduced TNX into the mix about a month ago, right? Or 2 weeks ago, something like that. And these things are behaving as if they front run the recession, okay? They see it, okay? It's rate cannot go higher. Rate cannot keep going higher. No matter, the Fed can still raise rate, okay? Now, if you go back and look at the history of the Fed and raising rate, it's not a one-to-one correlation with mortgage. There is a point where the markets say there is no more. Okay, there is a threshold. There's a lot of people that say, oh, mortgage rate, if the Fed keep raising rate, can mortgage get higher? Absolutely. But I believe there is a point where the Fed's, even if the Fed keep raising rate, mortgage is not going to get to 7%. Okay, I don't believe that it will, because there is, banks will raise rate. You have to understand, that's how banks make money. Okay, is there is a spread between what they can borrow from the Fed and what they lend to people. Right now, it is a Fed margin. Okay, because if they can borrow at 2%, and landing out at 5.5%, that's the Fed margin. But if you raise it, say, if the Fed fund rate is raised to say 3%, banks will have a hard time trying to match that one step at a time and raise it so that they can still get a 3.5% margin on that. That's not how it works. Okay, you go back and look at the history of mortgage rate. When the Fed raised rate 17 times, the mortgage rate did not go up lockstep. It stopped. At some point, the bank said, it doesn't matter if we had to borrow at 5%. We can't ask people for 7% because there is no demand for loan. Okay, so keep that in mind as well. Keep that in mind as well. Okay, so McDonald's, pretty ugly, but as I mentioned yesterday, 229, 228, 227, that's the point, okay? Right here, the fib at 229, everything is gonna get there, okay? Everything is gonna get there. Pepsi is ugly, falling below the 200. It done that before. So let's not get crazy here. It done that before, okay? The Russia crisis, okay? So slicing through the 200 is not a good thing, but it has done it before. No need to be a hero, okay? No need to be a hero. Let things settle down. If you can buy things cheaper, why not? If you can buy Pepsi, Coke, McDonald's, Mondelez, 5% lower, Costco, why not? There's no need to jump in right now, okay? Costco came right down to the 61.8. Wow, right? Wow. Magic. But can Costco go lower? According to the big guy, I asked him last night. He said 388. Don't ask me how he got that, but he said that is a key, 388. Let me look. Let me go and look why he said 388. The big guy don't just randomly throw out a number, okay? He said 388. Let's see why. Ah, see that? I know there's a reason, and there you go. $388. That was a prior resistance, the prior high before the pandemic. And then once the pandemic hit and it buzzed through, it run, okay? So for him, that is the spot. That is the bottom line for Costco. So I'm saving that, so keep that in mind, 388. The big guy is waiting down there. He will be buying down there. Can it get down there? Why not? Why not? Okay. Market is open. Everything is deep red. Yeah. Shockingly, BTC is holding in. How about USO? USO. Here we go. I'm waiting. As soon as USO get below 78 into the 77 range, I will start to cover. Okay? I will start to cover. I've been shorting from 81 to 82 with my puts, okay? So I'll be covering down there. Anyhow, I hope the chat was useful. And for the next few chat, I will focus more on economic talks than individual stocks because we all know, okay, this is like an old record replaying here. There's nothing new that I can shine in for you here. But I want people to, pay attention to what you listen to on TV and understand that no matter who they are, no matter what it is that they are trying to pitch to you, whether it's a bearish scenario or bullish scenario, they are selling a narrative because they are profiting from the opposing side. The people that are fear-mongering and predicting the market to go much lower, do you think they're not showing the market? It's utter nonsense to think that people go on CNBC for to be a good human. They appear on CNBC because they want to help you. You think that way? Is that how people think every host, guest on CNBC behave? They are saying things to you because they want to help you. No, they are on TV to sell you something because they are on the opposing side profiting off you. Okay? Every transaction requires two sides. Okay, so understand that concept so that you stop listening to talking heads on TV and behaving as if they are doing you good. They're not. They're selling you a narrative that they can profit from. It's that simple. Stop repeating what they're selling you. It irked me more than anything to hear people repeating shit. It is shit, utter shit. All right, people, enough. Oh, before I go, I woke up in the middle of the night last night with crazy sound in my house. Okay, here I am sleeping at midnight, and I hear noise, like rustling noise. And I'm just like, what the F? So I get out of bed, I walk around the house, I'm like, what is that noise, right? But it disappeared. And then I woke up this morning, I'm making coffee, and once again, I hear the noise, like rustling noise, like an animal trying to get out of a cage. I'm just like, what is that noise? And to my dismay, which has happened once before, there's a bat in the house. This has happened once before. Okay, I have a chimney, and occasionally, well, once before, a bat came down the chimney and get in the house. So it's big. I saw it. Okay, I saw it this morning. So guess what I'm gonna be doing in the next few minutes, if not a few hours? I will open the door and trying to chase the bat out. If not, I have to call a pet service, which I did last time. I did the same thing last time. I tried to get the bat to fly out. Use a broom. But if I can't do that, then I had to call a pet removal. They charge like $75 to come here with a net. One of those net thing, and catch it and then release it. But yeah, so I have a bad problem in the house right now. I know where it is. It's in the bedroom. It was out in the hallway to the backyard where the chicken used to live. But holy cow, now it has migrated into the master bedroom, so it's in there. I close the door so I know exactly where it is, so that as soon as I start off this chat, I will go out there and open the door and open the back door to the yard and use a broom and see if I can chase it out of the house. If not, I had to call the exterminator. All right, people, be safe, be cool. This too shall pass, okay? No need to freak out. Freaking out is not a formula of winning. I see the market is up a little bit. Amazon is up, blah, 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 blah. But don't buy the pump, okay? This is not over. This is not over. Be safe, everyone. Be careful. Hopefully I did not offend many people with my cursing and yelling. I want to be man bat. Bite me so I can be man bat. I don't want to be Batman. I want to be man bat.